Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Ladies and gentlemen, today we're going to start with the most uncomfortable truth in all of finance, that if you keep your balance sheet in dollars, you are on a treadmill that only speeds up. And the treadmill operator is the Federal Reserve, and it keeps hitting the increase incline button while telling you that inflation is under control. Tesla today holds about $36.8 billion in cash and equivalents. That sounds safe. That sounds responsible. That sounds like something a risk committee pats itself on the back for. But in reality, that pile of cash is a slow motion bonfire. Remember, the dollar is systematically engineered to lose value. It is the entire business model. Over the last decade, the US M2 money supply has grown 6.26% annually. Now, that is not an anomaly. That is the baseline. At that rate, in 15 years, the real purchasing power of this cash position that Tesla has collapses from $36.8 billion to $8.4 billion. Think about that. That's not risk, that's certainty. It's like buying a car where the manual says, "Congratulations on your new vehicle. By year 15, it will definitely explode." So now contrast that with Bitcoin, scarcity, programmatic supply, global adoption happening right now, and assets that compounds against debasement instead of melting into it. Every day, Bitcoin is swallowing monetary energy the way our vehicles swallow miles of asphalt. And the compounding effect is quite brutal in the best possible way. So we are in a world where capital allocators face two doors. Behind door number one is cash, guaranteed decay, guaranteed erosion, guaranteed misery. Behind door two, Bitcoin, volatile, yes, but structurally upward, antifragile, and mathematically inevitable. And by the way, let's stop pretending volatility is the enemy. Volatility is the price of admission for asymmetry. You want smooth? That's called a savings account that doesn't beat inflation. Smooth line straight down in real terms. Now here's the joke, and I'm only half joking. Leaving $36 billion in cash is like being the last guy on the Titanic, insisting the lifeboats are too risky because they might tip over. Meanwhile, the ship is literally drowning at a 45-degree angle and the string quartet is underwater. So I'm going to be blunt. If Tesla does not defend shareholder value against fiat debasement, we are complicit in shareholder theft via inertia. And that is the strategic imperative, because Bitcoin is not speculation. Bitcoin is the escape hatch. Now let's talk about performance. If cash is a melting ice cube, well, Bitcoin is a black hole pulling in monetary energy. Over the last decade, Bitcoin has compounded at rates that no other asset class can touch. Equities, commodities, bonds, all of them look like they're standing still next to Bitcoin's gravitational pull. And the great irony of our age is that people are still calling it speculation. But let's get real, kids. Holding dollars is the speculation. You are literally betting that a central bank with a printing press run by economists who couldn't run a lemonade stand will magically preserve your purchasing power. But here's a quick little spoiler: they won't. Meanwhile, Bitcoin is scarce, it's programmable, it's liquid, it's borderless, it's mathematically guaranteed to be harder to dilute than anything else that humans have ever invented. You can go mine more gold, you can go print more dollars, you can go issue more stock, but you cannot conjure another 21 million Bitcoin. And here's the good news: Tesla already owns 11,059 Bitcoin. That is not a token gesture. That is kind of a beachhead, folks. That's proof that they somewhat understand the future of money. Elon did not buy Dogecoin for the Treasury. He bought Bitcoin, and there's a reason for that. Now, here's the ultimate joke. If you took every fiat economist who laughed at Bitcoin in 2012 and invested $1,000 each instead of paying their salaries, you'd be richer than the GDP of France right now. Instead, they're debating whether 2% or 3% inflation is healthy, totally disregarding the fact that with those rates of inflation, your purchasing power goes down by 50% in 30 years, which is another reason why buying Bitcoin is an imperative for your children. That's a generation. 50% purchasing power destruction. Go look it up. Go ask ChatGPT. I'm not kidding. So all these Mag 7 companies, including Tesla, the situation that they're in right now is like being on fire and debating whether gasoline is an acceptable beverage. Point being, Bitcoin outperforms cash across every time horizon that actually matters: 1 year, 3 years, 5 years, 10 years. It is the only corporate reserve assets that doesn't just defend value, it actually multiplies it for shareholders. There's a reason why MSTR is the best performing equity over the last 5 years. And the longer that you wait, the more painful the opportunity cost becomes, because every year in fiat is a year that Tesla could have been compounding in Bitcoin. For a company that literally builds time machines on wheels, autonomous robots that free human hours, why would they let the balance sheet run backwards in time? Bitcoin isn't just an asset, it's the assets that upgrades the Treasury to the same standard of excellence as the Tesla technology. Here's where the numbers speak for themselves. Tesla's cash position today is about $36.8 billion. Remember that if they do nothing, if they take the so-called safe route, that becomes $8.4 billion in real purchasing power after 15 years. That is not an estimate. That's the math given the average debasement rate over the last decade. And what if it's worse? That's a huge possibility. That is the result of compound erosion. Now let's run the Bitcoin scenarios. Bitcoin compounding at 25%, Tesla's position would be worth $14.3 billion real, vastly outperforming cash, obviously. At a 35% CAGR, that would be $45.5 billion, and a 45% CAGR would be a $133 billion. So the choice isn't between risk and safety. The choice is between certainty of destruction versus potential for exponential growth. Cash gives us one outcome, erosion. Bitcoin gives us a spectrum of outcomes, all of them superior. And here's the kicker: the opportunity cost of staying in cash approaches over $100 billion or more. That's $100 billion plus left on the table, or rather left to evaporate. Holding cash for 15 years in this day and age is like locking your money in a freezer, except it's not plugged in. You come back a decade later, and instead of steak, you've got a puddle of rotten meat and regret. This is not theoretical. This is not hype. These are actual realistic numbers. And these are somewhat conservative Bitcoin CAGRs. Bitcoin has appreciated at rates far beyond this over the last 5 to 10 years. This is the math baked into the monetary structure of the dollar versus the immutable scarcity of Bitcoin. So the conclusion is pretty simple, kids. If Tesla continues to sit on dollars, they are choosing to dilute shareholder value. If they allocate into Bitcoin, they are choosing to multiply it. One path is admitting defeat to financial entropy. The other is financial compounding, and the clock is already ticking. Here's the video version starting at $36.78 billion in cash. You'll see the years up here ticking upward, and you'll see cash being debased while that small sliver of Bitcoin on the balance sheet drastically outperforming that original cash balance. And we're going to sit here and wait 11 years, 12 years, 13 years. It's really start to compound now. And boom, we're talking over $100 billion of value, kids. Tesla is already recognized as the leader in two exponential industries. There's autonomous vehicles transforming transportation literally into a software problem. And then there's artificial intelligence with Optimus redefining what human labor and cognition can scale into. But there's a third frontier that Tesla has yet to fully seize, but they totally can right now with that cash balance, and that is Bitcoin as a treasury standard. Autonomy compounds human time, AI compounds intelligence, Bitcoin compounds capital. Together, these three could create a moat that no competitor could ever bridge. So think about the positioning. Legacy automakers now are fighting to stay alive under the weight of debt and crumbling margins. The tech giants are hoarding fiat cash, a balance sheet that looks safe on the surface, but is melting in real terms every single year. Meanwhile, in this situation, Tesla could be the only company that is uniting engineering leadership, AI scale, and financial sovereignty all in one amazing, glorious package. That combination doesn't just make Tesla a car company anymore or an AI company, it makes Tesla the most economically anti-fragile company on the planet. Unparalleled financial strength is an opportunity here. So if Ford, GM, and Toyota are all the dinosaurs, then hoarding hoarding cash is basically saying, we've got a meteor coming, but we'll handle it with a really strong umbrella. That does not end well. The point is that everybody kind of acknowledges Tesla already has two pillars of an unstoppable strategy. Adding Bitcoin to that triad locks in the third, turning a world-class innovator into an economic superorganism. They would have an unassailable fortress that compounds time, intelligence, and digital capital simultaneously. That would not just be leadership, that would be dominance. And what is the ultimate point? My ultimate point is that every industry cycle eventually comes down to capital strength, financial strength, economic strength. You need to have that moat to be powerful. And like I just said, the legacy automakers are fighting wars that they cannot win. They carry heavy debt loads. They rely on razor-thin margins. They're exposed to fiat currencies that are losing 6% of their value every single year. Just imagine Tesla taking the opposite route. They just decide, hey, maybe even a sliver of our cash balance could go into Bitcoin. And you saw from that graph how much that could pay off. They need to do this. They could denominate their treasury in the one monetary asset that does not fade away. And this is not just about preserving value because it's all about perception. Investors don't reward companies for clinging to melting fiat. They reward companies that innovate in capital allocation the way that they innovate in technology. A Bitcoin treasury strategy sends a global signal. Tesla is not only leading the world in vehicles and AI, it is leading in financial architecture. So if you want to understand a competitive edge, picture GM executives at their annual meeting proudly showing off their cash reserves, while behind them Jerome Powell is literally standing there with a fire hose spraying dollar bills into a wood chipper. That is their current plan. So Tesla has the opportunity to set itself apart not just with their products, but with their balance sheet, and that separation would compound year after year. Eventually, it would never be a contest anymore. It's two different species trying to compete. One built for survival in a fiat swamp, but the other evolved to breathe in a Bitcoin atmosphere. Guess which one's gonna thrive over the next decade? So let's zoom in from the corporate level to the individual shareholder. Every share of Tesla doesn't just represent a slice of equity, it represents a slice of time, the labor hours of the employees, the vision of engineers, the sweat of the factories, the innovation cycles of the AI teams, and all of it crystallizes into shareholder value. When that equity is backed by a treasury in dollars, you're effectively telling the shareholders your time is decaying 6% every year. 15 years later, 75% of it's gone, not because the company failed, not because of anything we did, but because of something we didn't do, but because the currency silently stole it. When that equity is backed by Bitcoin, the message flips to the shareholders. Your time is preserved. Your labor compounds. Your investment compounds. The company's mission to maximize efficiency extends all the way to the balance sheet, and that alignment is very powerful. Tesla has always been about protecting human time. Autonomy gives people back hours every day. AI scales productivity across entire industries, and Bitcoin does the same for capital. So for shareholders, that's not speculation, that's protection. It's Tesla saying, we won't just build the future with your capital, we'll safeguard it against the entropy of fiat money. And that is what transforms an investor relationship into a generational covenant with the shareholders, because it tells those shareholders your time isn't being wasted, it's being multiplied. Remember, money itself is an abstraction of human time and human value. So what are you going to denominate your balance sheet in? The answer is quite obvious. When you strip away the noise, the role of a board and a CFO comes down to a single mandate: protect and grow shareholder capital. The problem is that in the fiat world, the word protect has become an illusion because dollars don't preserve value, they erode it. Sitting on cash is not conservative anymore. It's not prudent, it's not safe, it's willful negligence. Now contrast that with Bitcoin. Volatile, yes, if you denominate the value of it in the thing that is volatile, but beneath that volatility is an unbreakable scarcity, an adoption curve literally stronger than any other technology in history, and a liquidity profile that gets deeper every single quarter. So in fiduciary terms, Bitcoin is the only asset in existence that offers both protection against monetary debasement and exposure to asymmetric upside. And this is where your risk committee needs to recalibrate. Holding cash is a risk. Holding Bitcoin is the hedge to that risk. The old paradigm is totally backwards. Imagine a CFO in 2030 explaining to investors that they kept $30 billion in cash because it felt safer, while inflation quietly vaporized half of it. That's like locking the emergency exits during a fire drill because you're worried that people might trip down the stairs. So the fiduciary question is quite simple. Do you want to guarantee dilution of shareholder value, or do you want to position the company in the one assets that mathematically resists it? Bitcoin is not a gamble. It is the first Treasury reserve assets that actually aligns with fiduciary responsibility. And future investors are going to demand it. They're not going to ask, why did you buy Bitcoin? They're going to ask, why didn't you? Tesla already leads the world in two revolutions: autonomous vehicles, transforming mobility; artificial intelligence, transforming productivity. But leadership in technology means nothing if the balance sheet is losing value. You can build the future and still lose it if your reserves are trapped in a melting currency. Bitcoin is the ultimate third pillar. It is the financial architecture that can lock in Tesla's technological gains and compound them across decades. With autonomy, Tesla gives people back their hours. With AI, Tesla multiplies their intelligence. With Bitcoin, Tesla preserves their capital. That will create the most resilient, anti-fragile corporate structure in history. This isn't about being the best car company or the best AI company. It's about becoming the most economically strong company on the planet, stronger than any automaker, stronger than any tech giant, a company that compounds time, intelligence, and money itself simultaneously. And they have to do it because the contrast is absurd. Imagine in 2035 when Ford is still going to be bragging about their cash reserves, when Tesla's Bitcoin position alone could be larger than their entire market cap. This is not competition anymore. It is win or lose, and the answer is quite clear. If Tesla scales its Bitcoin adoption, it will not only lead in products, but in capital markets itself. It will become a fortress of innovation and a fortress of capital. The strongest balance sheet on Earth, powering the strongest vision on Earth. This is why Elon needs it. This is what transforms Tesla from a great company into a civilization-defining one. My name is Adam Livingston. I am the Bitcoin Wizard. If you like this content, please like this video, subscribe to the channel, and share this content to spread the orange gospel to the masses. Thank you very much. Have a terrific day. Class dismissed.